Alright, what's going on everybody? So in this video we're going to be going over how to actually trade. This is going to be one entry technique on the actual head and shoulders pattern. Now, of course you're going to be trading this like a normal pullback setup. It's just the fact that the pattern's not really valid. Like I said previously, we need to see an actual completion of the pattern for it to be considered to be a valid head and shoulders pattern. So if I draw it out here real quick. Right, so far this looks like it could be forming a head and shoulders, or we kind of had we'll put it at the candles, and then we had here, right, it could be forming a head and shoulders pattern, but it's not valid until we break our overall neckline here, right? It's not valid until then, which actually this is just technically the lowest point right here, right? So this pattern is not valid until we break this neckline here. So entering based off the right shoulder is definitely the most aggressive entry as possible. So I'm going to give you some kind of things to look out for when actually looking to actually trade the head and shoulders pattern. Now this obviously goes the same for an inverted head and shoulders as well. So now when it comes to actually trading head and shoulders pattern, we want to look again for confluence. So maybe looking at our left shoulder for previous structure to see if we can get a retest of that previous structure there. And on top of that, we can also use our Fibonacci retracement tool as well. Wait for that probably 618 retracement if we have that previous structure in that area. Now, of course, every head and shoulders pattern is going to be different. But another thing we could also look for is that loss of momentum. And then normally, like I said again, we'll be treating this like a regular pullback setup. So waiting for a PRZ level. So this specific example is on the 30-minute time frame. But let's say if it was on the 4-hour time frame. Then again, you wait for the engulfing candlestick at that PRZ level, then look for the break of structure on the lower time frames. Now, one thing you could also look for if you're one time frame trading, you could also look for a reversal signal, such as a pin bar, maybe an engulfing or a 3-bar reversal, and then obviously you have your rising and falling wedges, which are a loss of momentum pattern, right? Another thing you can also look for is RSI as well. So I'm gonna try and line this up as best as possible here. So we have the right shoulder here, we have the head here. Let's put that there, and then this is what RSI would normally look like if there's divergence for this head and shoulders pattern. So instead of having an actual head and shoulders on RSI, we'll have more like a lower highs forming. So let's say this was your RSI. Clearly, on the actual indicator itself, right, it's just flowing with the chart. We don't have divergence this time. But, excuse me. But, as you can see, we have a conflicting story like always when it comes to divergence. So we have lower highs being made, right? We have lows as well, but that doesn't matter all too much. Mainly lower highs, and then we have our head and shoulders pattern. So that could be another clue for the market to actually complete this head and shoulders pattern. Now remember, right, in this specific example here, right, it's not the best, especially that we're on a lower time frame, but this is just where I saw it form, right? So we have the left shoulder, we have the head, then the market came down, formed a low, then we came up and formed the right shoulder, right? Then here we have a 3-bar reversal candle, high momentum candle followed by a loss of momentum followed by a high momentum candlestick after that. So we have the 3-bar reversal at the 618, and we did reject this kind of previous level of structure here, right? So now of course you could have taken sell position there, right after this candle closed. You have to make sure it closes under the low of the previous candle to verify the actual formation of the candlestick. And then of course, right, now when you're talking about stops, again, when you're backtesting this pattern, you need to have very specific rules for your entries and very specific rules for your stops. So I normally like to put it 10 pips above the high, and I'll be looking for an extension level, right? So once I'm at a 1-to-1 risk reward ratio or 1-to-2 risk reward ratio, depending on the setup itself, then I'll be looking for a extension level here. Fibs, point A, point B, and point C. Now, if we were to trace off the 618, that I'm normally going to be looking for more of a, I guess you could say, maybe between a minor level of structure and a weaker trend completion, right? So minor level of structure and weaker trend completion. As you can see, we didn't quite get to targets here. We were 1 pip away, right? But we were at that almost a 1-to-3 risk reward ratio there. But then later on, if you're patient enough to hold it, then of course you'd have the actual second, not second entry, but you'll have your actual both targets hit after that, and potentially, you know, you could have caught the 1618 in this specific case here. And of course, again, we have a high momentum pattern here, right? And then we have our ascending flag pattern there as well, right? So again, lost momentum. Continue that. So that was basic, I guess you could say, how to actually trade the right shoulder. In this case, we had a 3-bar reversal. You could have waited for either an engulfing candlestick pattern or, excuse me, you could have waited for an engulfing candlestick pattern, some form of a variation. Again, you could have waited for a pin bar as well. Right now, you could probably ask myself, well, why didn't I enter based off of this variation here? Right, well, it's fairly simple. Again, point A, point B. Most of the times with the head and shoulders, I'm looking for a 618 retracement. So none of these candles here were considered to be a 618 retracement until this candle actually got to the PRZ level past it and then came close under it, right? So that's how you could have potentially be looking for that right shoulder entry. Now in the next videos, we're going to be going over how to actually trade the breakout and then how to actually trade the pullback and retest of the head and shoulders pattern. Again, you have your RSI example down here of RSI divergence, right? And then again, you can also use the grade book to probably help the probability of the trade itself. So RSI divergence, you could be looking for all of those confluences. Right, so I'll be talking to everybody within the next training videos.